Bitcoin and cryptocurrency trading for beginners. Discover the best crypto trading strategies to accumulate Bitcoin, build long-lasting wealth, and make the market your money-printing machine. Written by John Patterson, narrated by Jim Rising. Chapter 1. Simple terms every trader should know. If you are active in the stock market, day trading Forex, or a beginner to cryptocurrencies, there is a good chance that you'll come across several trading-related terms that may seem unusual. FOMO, ROI, ATH, HODL, you name it. But what do they mean? Trading and investing have their own language, and it can be difficult to memorize all these new terms. However, they can prove to be quite useful in keeping up with the financial markets. In this chapter, we've collected some of the most important terms you should know if you're trading cryptocurrencies. Fear, uncertainty, and doubt. FUD. While not exclusively a trading term, FUD, or FUD, is often used in the context of the financial markets. FUD is a strategy that aims to discredit a company, product, or project by spreading misinformation about it. The goal is to instill fear and gain some kind of benefit. It can be a competitive or tactical advantage, or a gain from falling prices caused by potentially harmful news. As expected, FUD is quite common in the cryptocurrency industry. In many cases, investors could open a short position on an asset and subsequently release potentially harmful or misleading news. In this way, it is possible to make large profits via short or put options. Those using this method may also prepare in advance with over-the-counter OTC agreements. In many cases, the information turns out to be false, or at least misleading. However, sometimes they prove to be correct. It is always helpful to try to consider all aspects of the matter. One practice that can help in these scenarios is to think about the possible incentives for people to publicly spread certain opinions. Fear of missing out. FOMO, or FOMO. FOMO is the emotion that investors feel when they rush to buy an asset for fear of missing out on the opportunity for profit. Given the strong emotions involved, FOMO on a large number of people can lead to parabolic price movements. The shift by investors from one asset to another following the FOMO, as in the chair game, can often signal the final stages of a bull market. The term FOMO is often used in the design of social media apps. Have you ever wondered why it's usually harder to see social media posts in strictly chronological order? This is also related to FOMO. If users could read all the posts posted after their last login, they would feel like they've seen all the latest content. By intentionally mixing old and new posts on the timeline, social media platforms try to cause FOMO in users to keep them coming back for fear of missing out on something important. HODL. HODL is a term that comes from a misspelling of the English word hold. Basically, it is the crypto equivalent of the buy and hold strategy. HODL's first appearance dates back to the now famous 2013 post on the Bitcoin Talk Forum, a typo in the title. I am HODLING. Hodling. Hodling refers to holding on to investments despite falling prices. It is also commonly used in the context of investors, hodlers, who don't get away with trading in the short term, but still want to gain exposure to the price of cryptocurrencies. Furthermore, it could indicate investors who have great faith in a particular currency and are willing to hold their investment for a longer period. The practice of HODL is similar to the buy and hold investment strategy from traditional markets. Investors who apply it try to find undervalued assets and hold them for a long time. Many adopt this strategy for Bitcoin. BUIDL. BUIDL is a term derived from HODL. It usually describes participants in the cryptocurrency industry who continue to build new projects regardless of price fluctuations. The main idea is that the true supporters of the crypto world continue to develop the ecosystem.
Sample complete. Ready to continue?